Great to be chatting with Andrew Whitelaw from thomaseldermarkets.com.au. How are you, Andrew?
I'm good, yes. Yourself, Ricky?
Great, thank you. Looking forward to the weekend. But first, as we do on Fridays, we look at what's happening in the markets. Let's start on the grains front. And, well, we keep talking about this Ukraine crisis now. Finally, the UN might have brokered a deal to get some goods moving out of Russia and Ukraine.
Yeah, I think it's kind of a bit like Groundhog Day, Ricky, in that we've been talking about this for 2 months now,
well,
maybe longer.
24 February, Russia invaded, so we've probably been talking about it since then.
Yeah, but we've been talking about the opening up of Ukraine for about 2 months.
Yes.
It's been a bit of a will they, won't they? Well, when you've got sort of two countries that are still actively at war, getting them to come to an agreement is pretty tough, I reckon. And so we've had these discussions before. Will there be a negotiated humanitarian grain corridor? Looks like it's getting closer. There's talk that Turkey will. Turkey's always been involved in these negotiations because that's the closest major country. And so now it's a case of they're hoping to sign a document today, I believe. And if they do, that will open up grain exports from Ukraine. So it's going to be really interesting to see if that gets ahead. This has been the major risk we've seen to the grain market over the last, really since the Ukraine war started, was if you bring Ukraine back into the mix, all of a sudden you've got a pretty big volume of grain on the market. We've had, obviously, all the grain that normally would have gone out between February and June hasn't gone out, so we've got a bit of a stockpile. And then you've got all the grain which is about to be harvested, which will also be back on the market. So for a while, we've always been pricing into the market a sort of an environment where this grain isn't available. And so that will put downward pressure on the market. And that's partially why we've seen the market coming under pressure since the middle of May.
But we're talking here, aren't we, about the global market in a sense. On the Australian front, we seem to have been sort of insulated against the impact of what's happening on the global market. If you're looking at the milling and feed wheat prices, they've still been pretty strong and since about March.
Yes and no, I guess. What we've seen with it is that when the global prices rallied from February, March, April, and into May, our prices rose, but it didn't rise at the same level. We didn't have the same pace of increase. So percentage-wise, our grain prices didn't increase anywhere near as high as they did in, say, US or Europe. And what we're finding is that as the market fell from May onwards, we were kind of insulated in that our prices didn't fall as much. They've fallen, but not at the same level as the overseas market. So we sort of got it both ways. We didn't receive the highs, but we're not receiving the lows as well. So, look, at the end of the day, though, wheat is wheat. It's a globally traded commodity. So what happens overseas is ultimately always going to impact upon our price, unless we have a drought. Luckily, we don't have a drought. So we're really going to be priced based on how competitive we are into the rest of the world. So we shall see. I guess one thing I would hazard is that we've heard for weeks, months, that there's going to be a humanitarian grain corridor opened. And so even though it's supposed to get signed today, I'm not even going to hold my breath until the end of today, because we will see, because there's too many human factors involved in this. But if it does, it will have an impact on grain availability around the world.
Well, casting our eye quickly across on the canola front, at least looking at international prices, they're below 2021 levels for the first time in the last few weeks, but they were riding pretty high. What's the main thing that's going on there on canola? Is it really just a northern crop and how that's looking?
The canola price, whilst it's lower than 2021, it is still high. It is still a very good price. And look, the big factors are, well, the reason we had such a high price for canola last year was because we had a terrible Canadian crop. This year, Canada is back to almost normal. They don't have as big an acreage, but they've got the yield. They've had the rainfall. And so it's looking a bit more positive. Look, and there's also one of the things with oilseeds is that there is a very close connection with the bigger commodities like crude oil, and because a lot of oilseeds will be used to make biofuels of some description. So therefore, there's a bit of a relationship between them. And we have seen this, I guess, quite volatile crude oil market. It's been up and it's been down, and with a lot of traders in the market concerned about a recession, global recession, that has also contributed to a little bit of downward pressure because traders don't want to be sitting there owning something that's expensive if the demand for it's going to drop. So quite a few factors in there. I would say that the reality is that canola is still historically extremely well priced. And if we could get the same price every year, we'd be pretty happy. Because bearing in mind, it wasn't long ago that canola was more like a $500 or $600 a ton, not an 800 plus.
Yep, that's right. Well, Andrew, if people want the latest insights, what is it, thomaseldermarkets.com.au? That's the website to check it out?
Yeah, you can jump on there. We've got a whole bunch of articles. They're all free of charge to access.
Great stuff. Thanks again for joining us and have a great weekend, Andrew.
No worries. Catch you in a bit.